On today's episode, we are going to take a look at some dangers in investing in SPACs. And let me just start off by saying, no, I'm not bearish. I'm not bearish in SPACs, right? I have plenty in my portfolio and I don't mind investing in them. But I believe there is some form of risk or danger behind them that many investors don't think about or don't talk about. So this video is plenty overdue. This episode, we're going to take a look at a few things. First, we're going to take a look at some examples, right? We need to see some real life examples. Then we're going to find out, is this more of just a SPAC problem or an overall market problem? And finally, we're going to find the solutions, right? Because there's no point in talking about problems if we can't talk about solutions. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream, taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So for a real life example, we're going to be talking about 2 SPACs. They have already gone post merger. The first one we're going to take a look at is XL Fleet. This is traded under the New York Stock Exchange as ticker SL. It's currently sitting at $7.89. And just on the most recent close, it ended down about 12.3% under. If we take a look at its all-time highs that it hit in December, the stock is down about 75%. And another thing we can notice, right, it is already below the nominal value of these SPACs, which is $10. Right now, it has a market cap of $1.04 billion. The second stock we're going to take a look at is Romeo Power Inc. This is traded under the New York Stock Exchange as ticker RMO. It's currently sitting at $8.28. Again, we can see it's below that nominal value of pre-SPAC. From its all-time highs, the stock has lost about 75% as well. And it has similar market cap of about $1 billion. These two are insane, right? From their all-time highs, they have lost more than 3/4 of their value. And now let's try to understand why this is happening. And I mentioned earlier, this might not be a complete SPAC problem, but it's a problem I do believe is gonna come more often in SPAC plays. So if you guys have done SPAC investing and hopefully do your due diligence, you would have seen forms like this, where they share what their projected revenues are at. This one is for XL Fleet, where they expected revenues for 2020, for 2021, and then similar for Romeo Power, where they give you expectations of earnings in the upcoming years. And now that we're looking at them, let's take a closer look. The first thing I'm seeing, and it's not a bad thing, right? We just need to understand where each company is in their stage of business, right? Right now, we can tell from XL Fleet right here, their revenue of 2019 was $7.2 million. That's super small, especially for a company right now. XL Fleet is worth about a market cap of 1.04. What investors are paying for is that this company is expected to grow at crazy levels. Look, in 2020, it was expected to grow 192%. In 2021, another 258. 2022, 273. Right? So crazy triple-digit growth for the next 4 years. And this is what investors are paying for. They believe that this is the future. And I don't believe that's a bad thing. Obviously, this is a growth company that is starting off. And if the potential growth is true, then this could be a super winner. But historically, it shows that this company is still brand new to its game, and there's a lot of risk there. The major risk is that those type of growth might not happen, especially since they look so far ahead. Normally, when I take a look at companies, I only try to look 2-3 years at max. I don't believe a company can really foresee anything from that. Another thing I do like to see is that, hey, have some form of revenue beforehand. It doesn't have to be something massive, but show me, hey, that there is a market behind. So XL Fleet, maybe some investors might think that there is a market currently right now. And the future, they're seeing that, hey, this can grow at dramatic levels. What ends up happening is the stock does not meet those guidance, or something happens throughout the way where they can no longer provide these types of growth and the stocks begin to tank. And that's exactly what's happened to XL Fleet and has happened to Romeo, right? Romeo, for example, in 2021, they expected $140 million in revenue, 412. Again, look, 1,000% growth in 2021, over a triple digit growth in 2022, and then strong double digit growth in 2023, 2024, and 2025. Again, I keep saying this is not bad, right? Because sometimes we have to invest in the future. But when we see companies like this, the first thing is I do believe they're a bit riskier, right? They're a bit riskier. And for those reasons, we have to be kind of mindful on how much we're willing to invest. So here we can see there was this cool article I found on Fidelity, and it says EV companies went public with big plans and they're quickly hitting snags. For example, we were taking a look at Romeo. Romeo said it expected the revenue for the year would be no more than $40 million for 2021. That is super shy from the $140 million that they projected when they were raising that money, when they were doing those SPAC mergers and when getting investors to come and join the company. So a lot of people are having pretty bad taste on they're giving bad names to SPAC companies, right? Another one was XL Fleet. So XL Fleet, they kind of no longer provided guidance for 2021, where previously they had expected guidance of about 75 million, which was going to be more than triple growth from their 2020. And they pulled those guidance, and now investors are like, whoa, about 6 months ago, you told me you were going to be growing at almost 250%. Now you don't even know what you might grow. And this has definitely brought investors to a negative mood, and that's why we're seeing these stock prices react the way they are reacting. So now I want to take a look. Is this a SPAC only problem? And my answer, I would say no. But a majority of the companies going through that SPAC merger are companies with similar stories right now. That right now they are new to this new emerging market, so they barely have any revenues, and the type of projection values that they're seeing are insane, right? When you're expected to grow 100% for the next 3 to 5 years nonstop, that to me automatically throws a red flag. Does that mean all SPAC companies are bad? I don't believe so, right? Like I do mention, I don't mind investing in SPAC companies. I've invested in a few throughout the way. Some of them have already gone post-merger. Some of them are still pre-merger SPACs. But what do I look at when investing in these SPACs? And I do believe investors should do this before investing in them. First is try to understand what stage this business is in. Is it because there's plenty of SPACs that have come out that have money already pouring in. They're already in a developed market. They're already a developed company. But those are the ones I enjoy investing. And that doesn't mean that they have to be slow growth companies. There's a place when a company is already making plenty of revenue, but still growing at crazy levels. So the first thing I want to say is when investing in companies like this in SPACs is try to find out where they're at in their stage level. Are they just truly beginning? Are they somewhere in the middle where they've kind of already grown a bit? They're already providing some form of value to the market. They're already providing strong revenues, but they're still expected to grow dramatic levels, or are they already a stable company? And each of them has a different place in my portfolio. For example, the company that is entering right now, it's not one I still would invest in them, right? But if I were to invest in them, my position size would be super small. The further they are in the business life cycle, the bigger they can be in my portfolio. So in theory, the second rule is to just have risk management when investing in companies like this. Because if not, we're gonna get burned. Imagine putting all your money in XL Fleet, right? Especially at the peak. At the peak, you're down 75%. Imagine if that was 20, 30% of your portfolio. That would be a heavy hitter. And right, I'm not gonna lie, I've made mistakes like this in the past, but the most important thing is to learn from them and see how you can improve your everyday investing styles. So, like I mentioned, the two rules to at least help us not get burned like this is one, try to understand what stage the business is in, two, just do risk management. And that rule, I want to say, doesn't only go for SPACs. I think it's a pretty simple rules to do when investing in any type of market. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up, make sure to hit subscribe, and let me know in the comments below, what are some of your rules before investing in SPACs? Are you just completely off SPACs? Or if not, what type of markets are you really hitting? And share some on the comments. I love to find new companies to invest in. So take care, have a good night, and see you next time.